Good morning, good afternoon, or good evening, and welcome to the TGI. Thank God it's Friday. But it's Friday the 13th. Ooh, spooky. Friday the 13th. If you believe any of that nonsense. It's Friday the 13th, TGI Friday the 13th. Thank God it's Friday, the 13th of October 2023. Welcome everyone to the Bull versus Bear webinar for Trade Day. Steve Miley on the call. Welcome. So we're going to go for a usual regular run through. We're going to go through the markets, but first of all, we'll take a look at the fundamental macroeconomic geopolitical events that are shaping markets right here, right now. We'll take a look at the articles from the major news wires, and then we'll have a quick look at the charts. Just want to first of all draw attention so markets. With just a little bit of a dislocation in here. So yesterday you can see all the treasury bond markets in here. Remember, you can get this just below where you're streaming now. There's a technical analysis section. We're now sharing the treasury bond outlook in here, and you can see we had a significant sell-off in treasury. So treasury is down in price, higher in yield yesterday. Down in price, higher in yields yesterday. We saw after the CPI release as CPI running hotter than expected. So, well, not really hot, but warmer than expected. It was showing sticky. I think sticky is the term that the market seems to like at the moment. It's not moving down as quickly as we would and the Fed would like. So sticky inflation, slightly warmer, not far from hot, slightly warmer than expected in here on some of the inflation data readings. And then that's less attractive to own. Obviously, if you've got more inflation than expected, you don't want to be owning bonds, right? Because then inflation, the real interest rate is lower if you've got higher inflation. So bonds sold off, as you can see in here, and across the board, across the curve, 30 years, 10 years, 5 years. And from a technical perspective, we shifted back to more negative in here. And then you see these going back to the bond market. There's significant sell-offs. We're giving back over half the rebounds that we've made in the last week on most of these charts. You can see, right? So I'll just zoom in a little bit more. But you can see in here significant sell-offs. Giving up half the rebounds from about the last week, right the way across the curve on twos, fives, tens, and 30s, at least halfway back. But if we look at what the indices did in here, I'm going to zoom in a bit more on this as well. On the chart, you can see in here nowhere near as negative in there, so not as negative. So you kind of a slight dislocation. So we've actually stayed more positive on the stocks compared to. Remember that we've been talking about the correlation between these in here, and so we've kind of stayed positive on the stocks on the technicals going into the day, despite the rebound that was obviously written last night. And here as well in here, just churning. Don't want to turn to gold. I want to look at oil. If you look at oil in here, has slid lower this week, and then even lower again initially yesterday. We closed that gap. The gap we had up on Monday, we closed that a day or so ago, and then lower again yesterday. So some of the pressures from oil in here, the kind of the negative pressure from oil, were easing, and this certainly looks more negative. But then if we then fast forward to where we are now, okay, so going to the treasuries actually having had that sell-off and look more negative. They've actually had a decent rebound in here overnight. So we've had a rebound back higher in treasury bond prices. That's back lower in yields. But, and here's the but, but oil has shot back higher, right? So it rebounded from below the low that we had here from the beginning of October. So a really big rebound here in oil this morning. And if we go and take a look at where we are on the indices, so here, stocks having had the sell-off, where you've had that significant, decent rebound in treasuries, we haven't seen. So obviously the stocks were less damaged on the way down, but then they've not rebounded as much in here. But they still hold on to that positive tone. You can see that 13-period EMA now acting as support. The market dipped below it yesterday and recovered above it, and is kind of flirting with it right now. That 13-period EMA on the ES, I'm kind of doing the webinar a bit back to front, starting on the technicals, but I think it's important here to see that we kind of had a little breakdown in the dynamic. So yesterday stocks and bonds were down, but bonds were down more aggressively, okay? And now on the rebound, bonds have had a much stronger rebound, and stocks are a little bit more hesitant. And not only there on the ES, but you look at the NASDAQ. Now we're way above this 13-period EMA on the NASDAQ. And NASDAQ was nowhere near as damaged yesterday. You can see we actually We actually rebounded into close. But then look at the NASDAQ this morning. It's notably down. This is a little bit worrying. The NASDAQ looks a little bit more wobbly, okay? So stocks are looking a little bit wobbly in here, looking a bit more negative, even though we're holding on to that positive tone. And whilst we're above yesterday's lows, so you can see we did dip down and rebounded from above yesterday's lows this morning, okay? So if we step in on the NASDAQ in here, that's going to be no good to me. That's a 1 minute chart. Let's come out in here to like 30 minute. You can see in here, we're kind of got, the market defended this low. We did undercut this low yesterday, but we defended this low this morning and trying to rebound from it now. Now, it's whether we can get back above the overnight peak there. So around 15.3, 15.334. We really need to get above there for this to be a little, to reinforce our still ongoing positive tone. And if we go and look at the ES on the 30 minute, the overnight in here is up at 43.91.75. But again, look, defending that low from yesterday. And you've got kind of quite a bullish candlestick down here on the low on the 30-minute chart, a strong hammer candlestick, and then we're defending that. So looking for the upside to stay in place in here. And this should be helped by the fact that, going back to the bonds, that bonds have had, that's the oil, the bonds have had a decent rebound. We've got back half the losses from yesterday. Yesterday's losses almost wiped out half, pretty much wiped out. If I zoom in here on the bonds, you can see, so here's the rebound that we've had in here over the last, I'm actually going to take it out to the 60 minute, 1 hour chart. So here's the rebound we've had, right? And if we look at the Fibonacci of the rebound, what do we see? Now I'm doing the webinar a little bit back to front in here this morning. But you look at the whole rebound here, right? We took out more than half. We are just below the halfway point, okay, here. But then look at the rebound. If we look at the Fibonacci on the rebound as well, we're now back more than half. Okay, so we're kind of rejecting this sell-off from yesterday already, where we've done nowhere near that. Obviously, if we go back to the, we've already looked at this, but go back to where we are here, right? So there's the sell-off from yesterday. Nowhere near as negative compared to the rally of the last, since the beginning of October. If you look at the rally from the beginning of October, the fib on this, right? So this is the ES. Let me just get it on the page. So if we look at the rally from the beginning of October, we actually held, look, bang on pretty much in here. Bang on, we held at the 38.2. Boom, right off the 38.2% retracement, right? So we held, so we're nowhere near as deep. Remember, on the bonds, we went 50% down, right? But if we look on the rebound in here, bonds are more than 50% of the way back up again. We didn't make 50%. We failed just below the 50%. So these are kind of the lines in the sand now, right? The low from yesterday, and then really the overnight high, and that's what we kind of flagged there. And they're important retracement levels. So above in here on the ES, above like 43.91.92, it looks more bullish. Down here through here, 43.54, it looks more negative. Even below then the this overnight low in here, which is, why is it not coming up? That's annoying. Sometimes does. It's doing this for you guys as well. The data, there it is. Data box just disappears. So the low from overnight is 65.25. So that's going to be the key on the downside there. Okay, let's switch back to the fundamentals. So yesterday's CPI, just say it was warm. The phrase that the market's kind of using at the moment, a lot of the commentators are using, is sticky. It's not going down, it's not really going up, right? But so if you look in here, the actual core CPI is all bang in line. The core CPI right in line with expectations, but the headline CPI, the month-on-month was slightly above. It was 0.4 with expectation of 0.3, but previously it was 0.6. So it's moved lower than the previous, but it came in higher than expected, right? But not by much. And then the headline number in here on the year-on-year, 3.7 last, expecting it to nudge down to 3.6. Sticky. This is why it's sticky. 3.7 still, so it hasn't moved. And you would hope that would be moving down. Fed obviously want it to move down towards their 2% target. So sticky is the term that the market's using. So that was the tail of the tape yesterday, and obviously the market didn't really like that. Didn't like the fact that we got this sticky inflation, so stocks were lower. Let me go to today. And that's fairly quiet in here. We've had some European inflation data this morning. Hasn't had a really big impact. You see all this French data in here pretty much in line with expectations. We did get, if I just go back to yesterday, though, trade data in here. So trade data in here better than expected. You can see in here from China. So a slight positive on that one there. CPI data lower than expected. So China seeing like PPI data in is still negative, very, very negative. So that's a little bit of a concern. Right. What else do we have in here? So going back to today and the going back into today. So we have the import price index, this trade data, not really that interesting to us. Really, in 50 minutes time, trade data doesn't really have any impact on what we're looking at. I've been doing this for 30 years, and US trade data doesn't do anything. Most trade data, apart from Chinese, doesn't really do much. Then we have the Michigan. We do have Harker speaking today. But then we have, so Harker speaking at 9 a.m. Eastern time, and then we get the Michigan consumer sentiment. People often forget this. This can move markets a little bit. So watching out for that. 10 o'clock Eastern in here, Michigan consumer sentiment to round off the week. So a fairly quiet start end to the week. But we do have earnings season kind of kicked in earnest today. So most of this in green, as you can see, United Health, JP Morgan, Wells Fargo, BlackRock. BlackRock, slight miss on revenue, okay, but most of this in green. So most of this better than forecasting here. So that's definitely a positive. And we'll be running and watching this going into, but the market's not reacting that positively. We're obviously slightly down this morning. So Wells Fargo tops estimates. There's a headline there regarding that. Futures though lower this morning. Okay, and it says ahead of big bank earnings. Well, those earnings are coming out now. Market's trying to rebound, but not really a significant rebound. So escalation in here. Israel saying evacuation of all citizens and Gaza City within 24 hours. Significant military activity in coming days. So a slight escalation there in here. House Speaker race in here, not really that interesting for us in the trading world. China struggling to generate inflation. We spoke about that negative PPI data in here, but rumours as well of further fiscal stimulus to come. Oil, jumped back higher in here, having moved down as we got that escalation in oil as well. Sorry, an escalation in the war. So we're seeing a leap there in oil, and we've already got these data points out. And University of Michigan and Harker speaking later today. So just running through some of the headlines. Treasury and oil jump. So they've jumped because safe haven. That's the main reason that treasuries are up. But previously, with treasuries back up, stocks were going with it, right? But in this case, not, because there is an element, obviously, this is bad news, right? The reason treasuries are going up and the oil is going up because it's bad news escalation. So that's actually negative for stocks. But because of the high correlation between stocks and treasuries at the moment, higher bonds has been equaling higher stocks in here, but at the moment we haven't really seen that because it obviously is a geopolitical risk in here, and obviously we've got JP Morgan, Wells Fargo kicking off early season with beats, so we're beating on those. We've already mentioned that. Beijing hints at more fiscal stimulus. We're again getting these hints after further weak economic data. We looked at that data. We keep getting these hints. Let's see that if they deliver at some point in October. Oil surges again as we get the escalation of tensions in the Middle East. And then nothing really sleeping out in here. China's trade slump eases slightly. So that data was slightly easier than kind of previously, but still not great in here. China consumer price stall as well. What else do I have for you? A spooky Friday for bonds. So let's see what happens with the bond market in here. Obviously rebounding in here at the moment, and we've been monitoring this. This is hovering around 90%. So this is the next meeting. Very little chance of a rate hike. This is rate staying unchanged, and by the end of the year, this stays relatively elevated. 70%, around 70%. This has been sitting for the end of year for unchanged. Where even though the Fed are telling us, the market's still not believing it. The Fed have, remember, this week stepped towards more dovish. Okay, guys, just a quick recap on the overnights. I've already run through the charts in here. So stocks in China down with the data. Nikkei was slightly lower with US lower overnight. European stocks are down between 0.5% and 1% in here this morning. And so relatively holding in okay, but we were down yesterday, obviously, on the major indices. These are not popular, but we know these are slightly lower in this morning, but trying to rebound. Right, guys, that's all I've got. Any questions? No questions. All good. All right, guys, I'm going to leave it there. I'm going to wish you all a great trading day. Have a great weekend too. I'll be back with you on Monday with another Bull versus Bear webinar. Until then, take care, stay safe. Bye.